TGIF Warriors. Hi, Jordan. Mike, who's grateful? What are you grateful about? The team could answer.
Being the weekend.
Okay, that's
I get to
good.
drink
That's
beer.
That's fine. How about everyone else here?
Coach, I'm thankful for you, buddy.
No kidding. I appreciate that.
Of course, dude.
Okay.
You've been with us since we kicked off ForexAnalytix. So of course I'm grateful for you.
You know what? You deserve a medal for putting up with me. That's all I could say. All right.
Actually, I do. I don't disagree with you there.
All right. Anyway, I did want to start out. Kman, are you around, buddy?
I am, my friend, and I'm grateful for you as well. I'm grateful for Friday, and I will be a lot gratefuler tonight.
All right, and just want to show the magnet line on the wand. We're not there yet.
It's coming.
Sometimes if it's just the magnet line, it's not the same. But when it's my magnet line,
that's it.
And it can't get there, sometimes that means it's such a powerful line that it's reversing the polarity.
Yeah, I was just going
and begins to repel price for sure.
Opposing poles.
Yeah.
Can you draw one down to 690, please?
Well, how about trend will come in down here. You might be close to the top. I just want to cover one stock. Everyone's talking about Apple now. Okay. With the news. And this is how I see it. This gap was earnings. The rally here, it looks like it filled the gap, but it didn't. So I could label this a breakaway gap as it broke away from trend. It did it with a gap. And then we have this failing rally so far and left a gap on the China news. And I don't think we'll fill this. And this could be a runaway gap. So I see the next important, really the key for Apple to keep the bull market alive is holding this range here at 62 and 56 was the breakout. So, 160-ish. But if we start taking that out, then I could start making the case for, 130, 200-week moving average. This old channel, if we get back inside, and that's under 160, the lower channel line comes in under last year's lows at 115. That's what I'm looking for. I even heard a fundamental guy on CNBC back that up with he's never seen so many headwinds for Apple, and that they really haven't been making money for a while. Then I saw how Apple's been underperforming the tech sector, even though it had this move. It's not keeping up with what semis did and everything else. So Apple, if we hold here, that means that I think the S&Ps will hold that 4,200 level or so. So I think this is we'll see who wants to go home long over the weekend here. It's an inside week, negative week, and we'll see. I'd like to see follow through today. So I don't know. Go ahead. Yeah, I'm sorry.
Do you think Apple's overdone, mate? I've seen, I think Morgan Stanley or someone this morning saying that it was overdone.
Yeah, well, you know what? I'd sell any price rip towards 180.
Yeah.
Okay. I think I have to. I think that what the Chinese did, and it's funny, Ryan, that I come up with these narratives, and I actually said this on Real Vision, that I thought that China could hurt us by taking on Apple and banning the phones and using their own phones. And I heard yesterday there was they got a hold of chips or new phones that they have. They are making it with chip technology that we thought we had stopped sending to them, which means they broke the sanctions. You know, they got it anyway. So, you know, if you lived in a communist country and you saw the whole party not using Apple phones in that society, would you keep using your Apple phone?
No, I guess not. And if
Yeah,
they
so-
put a ban on it as well, you're not going to get updates. You're not going to get apps, all that sort of stuff. They can put a block on, can't they?
Yeah. So anyway, I think it's you know, and it's not going to be the end of the world at 120. Probably be a great buy. So anyway, currencies have been drip, drip, drip kind of all week. It really hasn't been where the action's been, has it?
You know,
These last 4
hey Dale,
days.
I want to say that Ryan, you know, made a good point today in the chat room. He's like, you know, Europe's been, you know, very quiet this week, and I find that interesting, and because we can see it in North American trade too, because soon as you know we hit the noon hour East Coast, and so all the Europe, you know, UK traders or European traders are heading out. It's been a really quiet week. What do you attribute that to, Ryan?
We're all lazy, mate.
Yeah. Yeah. Well, I know you guys have all your kids still in school and they start next week, but
mine were back yesterday.
oh, okay.
So-
All right.
You know, it's after
I
Labor
just
Day.
think there's
That makes it even more unusual because we were all looking forward to
yeah.
the money coming back to the market after Labor Day.
Yeah, I mean, I think it's the week after NFP is usually a quiet week. We haven't had much data out of Europe and the UK. That all really kicks off tomorrow. Next week, and obviously the ECB's next week as well. So it'll liven up next week definitely. But
yeah, and I was gonna say I usually you know, when over the years people would ask, you know, hey, well, does it get busy like, you know, right after the, you know, the Labor Day weekend, and really it takes a week or two for the liquidity to come back. I mean, people are, you know, jumping back into their, you know, back into their offices, planning, you know, how they want to attack the markets over the next, you know, going into the end of this year. It's not like you know, you just jump in and you just start, you know, they're not a bunch of day traders. Everybody's, you know, I mean, there's a lot of positioning and a lot of, you know, strategizing on how people want to attack this market. So,
yeah, very much so.
So yen looks like, you know, I'm going to sell new highs next week. What do you think, Ryan? I mean, because this time, if we make a new high on the 4 hour, I like call it 49. I think it might be worth a shot up there. So that's something I'm looking at maybe next week. And the dollar, do you think that could be a treat? What's that?
We've got CPI next week. That could be a very big swinger.
Okay, good. Aussie and Kiwi are actually the strength here. Does it mean anything? Gold's up a bit. Kman pointed out that line in Kiwi 2 days ago that it held and is coming off of. Do you like it? Off that line?
I think a lot of positioning already in that. It's yeah, I think it's more about positioning. We have seen the various phases, but it's all going relatively slow. You know, this morning we had a bit of a blip in the Aussie as well. Took out a few stops above 64. Kiwi probably doing the same with a bit less liquidity in there as well. Perhaps those euro antipodian crosses are that heavy, but really it's and nothing has really changed, right? And then yeah, perhaps we will need to see more. Yeah, perhaps next week inflation also in the US to pick a side. But I do find antipodians doing okay despite what's happening in China. So there's a little bit of a decoupling there. So that's perhaps one to keep an eye on. But for the rest, yeah, it's been a quiet day today. There has been a few things moving, but then most of the stuff is where we left it yesterday. Yeah? Apart from Kiwi and China, a bit weaker because the PBOC fixed above 720 again. That's probably it. But again, we stopped around the 2% top end of the band, also in CNH. Well, I don't know. This Friday, unless there's a big surprise on the Canadian jobs report, this Friday could be one long drag until the end of the week.
Dr. Copper, I think
Yeah, that
I
one.
I would mask up around Dr. Copper. I think he has COVID.
Hey, and then usually that is a drag on the Aussie, and it's not.
Yeah.
So the Aussie is a bit decoupling, I'd say, from its usual fundamentals,
I have this line
correlations.
off the previous two the lows. I mean, comes in a little under 63, 62 and a half or so.
Yeah.
And we will be diverging on the daily. This was a confirmed low. We've made margin. I don't know if we've held them or not, but we're, way over 30. So if we pull, this could be a decent shot for a long next week. I'm thinking. So just wanted to show the formation. I don't know. I guess you could call it a wedge, which, most three drives are.
They're all looking similar. That and the Kiwi. What they've done is stopped falling, but the bounces aren't anything to write home about just yet. I mean, we can't even get back above 64 in the Aussie and hold it.
Yeah.
So it's the jury's still out, as we like to say.
Yeah, there's the channel.
Hey, Dale, have you looked at, and here's the one thing that I was looking at this morning and posted it in the chat room, is take a look at copper and look at how important copper's support is right now.
Yeah, but you have a trend line off here, or
yeah. You just I think you can actually go further out than that too. I have to go back over to it, but yeah, it stretches all the way back to the lows on July of 2022. So if you think, just go, take your
right
cursor, there you go, right there, all the way, to where we're at.
Yeah.
It comes into where we're at today. I mean, if you think about that, and you think about like the Aussie, and you're like, well, copper should find some buyers here, then the Aussie should find some buyers around here too. But I have to point out what Ryan's just saying. There has been no buyers, and that's the thing about price action. When you watch price action in the market, and I try to explain this concept from time to time, when we're with our traders, during like
nice
the morning
line,
edge.
Blake.
Yeah, it's like, okay, when you get to a support level, or let's say you break down, like the Aussie is a great example. You break down, you break below 64 cents, and you break down, yet it's not bouncing, it's just sitting there. That means that, after such a dramatic fall that we've seen in the Aussie, no one's really finding it as a value proposition down here. If they did, there'd be buyers coming in, below, the 64 cent level, running it back up to 65 cents. The price action would suggest that, hey, maybe this is some significant support. But, we're here, and it's like we've fallen, and it doesn't really matter what happens. It just can't, buyers can't step in and get it going. So the longer you sit down here, the riskier it becomes for anybody who's long. And, that's the problem with the Aussie right now.
And the flip side is, if it doesn't go down further, you got to worry whether sellers have run out of puff. So it's like, who's gonna take the initiative?
Yeah, and so that's when you have to kind of look around, Ryan, and like, looking at copper. Well, what if copper starts to break down? What if it does? I mean, I sure as hell, if I was long Aussie dollars and copper started to break down, I would be thinking twice about that.
But are there really people very long Aussie? I don't think after such a move,
You don't think there's people long Aussies?
No. Well, of course, there's always 49% of the market long, 51 short. That's why we move. But I don't think that anyone is really long Aussie. I mean, I wouldn't think so. If you look at either technicals or fundamentals, there's not too much reason to be really long Aussie. putting positions in danger. I wouldn't think so.
I'd agree with that. I don't think there's any reason to be short dollars right now, but people keep shorting dollars, you know.
Hey guys, I just noticed this between Aussie and Kiwi. Look how much more Aussie has given back off this rally compared to Kiwi. Kiwi's the relative strength leader here.
Yeah, and the Aussie New Zealand is actually breaking wedge support today.
Okay.
Right.
Just like it's close to 108.
Okay.
Yeah. So, but Kman, going back to your comment here, the Aussie's sitting on you could argue that the Aussie's sitting on the same support that that copper is. You know, the long term, like if you go from the COVID lockdown lows, which those generational lows, you slice a trend line right through the bottoms. We're basically there. I mean, you can argue, well, we're below it, but you know,
but that doesn't mean that people are long and starting to get worried. I don't think so. If you look at copper going down, if you look at China going down, and if you look at the price action in the Aussie and the strength of the dollar, I mean, I don't think that there's, apart from intraday traders and things, but I'm not talking about these people. I'm talking about real money. I don't think there's anyone really sitting long Aussie and getting worried. I mean, that's what I mean. So I mean, and then to explain those little moves that we see is probably just people taking a bit of profit, and like what we saw in the Kiwi. Let's not forget that the Kiwi, there's not an awful lot of liquidity in there either, right? It's a small market. So if people want to take a bit of chips off the table, it's going to bounce a bit, right? So that's what I mean.
Okay. Blake, you want to take over the charts? I have to go look.
Sure. And you know, and that's okay. This is actually a really good a segue really quick. And I'm gonna take this over because I want to show you guys something really fast. This is the CFTC positioning and data. Then you can see it. Kman and this is actually confirming exactly what you're saying. You know, a lot of the speculators, you know, fast money, if you will, they're not long. They happen to be short via the CFTC data. So that's actually really confirming what you're saying. So just I find it rather interesting. So and that, you know, brings me to actually one of the charts that I posted yesterday, and I found this really fascinating. Where did my I don't know where my Twitter thing went. Anyway, I can pull it up in a different chart. And this is that long-term Aussie support that we're finding. You know, really, it's right through here. And I could almost argue that this is some sort of harmonic pattern. I don't think Benedict's up this morning yet, but he's, you know, one of the traders in our chat room. You could argue that is, you know, right around the 127% extension right there, which could lead to a bounce. But you know, I'll defer back to the Aussie though. As far as the Aussie goes, the thing is not bouncing, and that is scary. And actually, that, you know, is scary about the dollar. The dollar is not pulling back. And then what I was trying to point out, and if I can get over to it, I posted this chart yesterday on Twitter, and Ryan came in. You guys were probably gone. It was at the end of the day. And this is the same CFTC data, and this is the euro. Much different view that you see here on a 10-year chart, right? And what it shows you, if you look at the green, you know, the green line here, which is the large speculators, manage money, you know, non-commercials. You can see when they get really long, that forms a big top in the euro. When they get really long, they form a big top in the euro. This is back in, you know, 2020. Here's, you know, really long, and they haven't really shifted their positioning, and we might be forming this top in the euro. And that's the one thing I wanted to point out. You know, when people are like looking at the dollar and they're like, oh, you know, the dollar, it's gone way too far. It can't go any further than this. This is when I start looking at charts like this and go, you know what? It's possible that we do get a continuation of the dollar, you know, longer term. And that's, you know, that's when you start looking at this low, and Dale, you start pointing at 110 in the dollar index, and, you know, the euro trading down to 105 to 102.
Yeah.
Right.
Yeah.
You know,
they're fib retracements. And
yeah.
you know
I mean,
And so the bear case could be right. It just, we have to clean up that sentiment and positioning first. So
yeah, and that's the thing is I've been really surprised that in like big money positioning hasn't changed much, even with the euro dropping below 108, like as the euros drop below 108, 110, and through channel support here, I've been surprised that positioning via the CFTC data, which we'll get again today, which will be data fresh as of Tuesday. I mean, I'm assuming it changed a little bit. You probably got less longs in the market this week than you do from last week, but it's not a big change. It's it's very marginal, and it has been marginal over the last couple of weeks. So, and then on top of it is, Ryan, you mentioned, next week we do have CPI. We have the European Central Bank next week. Is it next week? ECB is next week, right?
Yeah.
Thursday.
There's a lot of big data. Got UK jobs. We've got Empire State, US retail sales, PPI. It all steps up a notch next week.
Yeah, and anyway, I thought I'd bring that chart up because I found it so fascinating to me that the positioning just hasn't changed a whole lot in this whole decline. So anyway, do you guys have any comments about that? It's not, and it's one piece of data. It's not like, oh, you hang your hat on that, but it is noteworthy, I believe. Any opinions here, Ryan?
Well, looking at that chart you had up, could you say that the other people who were short picked the highs?
This is the long-term 10-year chart of the euro.
Look at those commercials; they're all short, and every time they get maximum short, you make a high. Red line.
Yeah, you follow the commercials, although they have deep pockets and they could be wrong for quite some time and price and time, but they usually end up being right.
Yeah, I mean, again, I'm gonna just just take a look here at the divergence between the two. When you max out the divergence between the two, that is when you get the turn, right? That is when you get the turn, and that is what we're seeing right now. And that's why I'm thinking, wow, if they start to, you start to see the commercials come back, and they start to cover, and you could argue the same thing. It's just opposite. You can say the opposite. Who's on the other side. That suggests that we might trade back towards 102 in the next.
Yeah, that's interesting on the divergence, like you say, the maximum divergence between the two.
Yeah, I mean, 10 years. It's not like some small sample. This is pretty noteworthy, in my opinion. Kman, you have any opinions there?
Well, first of all, I have to say CFTC, COT, whatever, are not the full market.
No, you're right.
Secondly, we only see cash exposure. You don't see the options market. You don't see the treasury market, the bond markets. There's a lot of things that can vary, and then I mean, it's undeniable that there is how should I say, a coincidence or coordination or between the extremes. But then also we've seen that those people were building up. If you take the speculators and the asset managers on the one and the other, they were building up on the way up. And then they start to build off on the way down. That green line, the green line. If you look at, they were negative at if you take, for instance, your second circle, right, top and bottom. If you see the green line there, they were actually short at the bottom, and then they started to buy, and then that caused the move up. And then afterwards, yes, I mean there can be a move down, and they're probably going to build off, but. Out of experience, we've always been extremely careful when I was in banks to rely on those numbers, and they can stay this way for much longer as we can explain a move,
100% agree. And that's why, I started looking at the CFTC data. It really got my attention last month. And last month, I'm like, man, this fast money crowd is still long euros. And for me, it's kept me pressing the euro to the short side. And that's why I've been, consistently trying to be long dollars, short the euro. And I guess my biggest surprise is that we just haven't seen the shift that I thought we would see in this big of a drop already. And you're right, 100% right. And it's the same conversations I'd have with like all the guys that I used to trade with at Gelos that are ex-bank traders. It's like, it's such a small, it's not a big piece of the puzzle as it was like, 20 years ago. The CFTC data, even 15 years ago, was a little bit more important in my opinion, but there are so many different pockets of liquidity now through options and not just futures and not just cash. I mean, there's so many different ways to play these markets that you have to be, more open to other things. But I thought it was a rather interesting sampling. But at the same time, I look at the euro dollar right now. And let me see if I can pull this up for you guys here. This is just the ForexAnalytix chat room. Let me get you over to the DSI, which is just another piece of the puzzle that we have. This is the news and research room here, guys, in our chat room. You can see that the dollar index right now is at 90, which is very, very extreme. That means extremely bullish sentiment in the dollar right now, which is becoming a bigger risk for the dollar as we approach this 161% extension. The dollar has been pressing all week long since we've been in breakout territory beyond this channel. And, we've been reaching for the 127% extension, targeting, the 161% extension, which is very, very close. I mean, we're not too far away. You can see the
550.
Yeah, 105.50 resistance, that we're looking at right here. It's previous support. It's the 161% extension. Daily, the RSI is divergent. So you got to be obviously a little careful buying dollars, but based on what I just showed you, near term, the dollar might be peaking, or maybe going into next week, or sentiment is pretty bullish. But at the same time, longer term, we are still trying to break out, and we are actually forging, higher highs, not lower highs. And that's from a trend perspective, that is notable, right? That is a lower high. This is a higher high. So we got to be respectful of that now, dips are going to be bought. And I would think any dip towards the 200-day moving average, if you're lucky enough to see it again, that's where you have to be a buyer of the dollar, if we get down there. But anyway, we're 2 minutes away from Canadian data. We haven't even looked at the CAD. Hey, real quick, Ryan, Kman, I know we're up against channel resistance. We're up against the 78% retracement. Been kind of targeting up at channel resistance all week. We talked about this earlier. What's your opinion here about the Canadian jobs? Anything?
At the moment, we're holding above 136.50, which could be significant because it's been bugging that line all week. This could be a mover, because if we suddenly see weak jobs, that's going to play to the dovish side. I think Macklin was a bit more hawkish yesterday in his speech, worrying about inflation. I think if they get probably two more higher prints of inflation, they'll hike again. But the jobs market, he was saying, was below trend. We had a poor number last month. We'll move with whatever it does this month.
Hey man, we have not seen the Canadian dollar weaken as crude oil has been just ripping balls higher. So what do you make of the Canadian here?
Yeah, it's still offered. The Canadian dollar is still offered, and because dollar CAD just sitting here without moving on those oils. So I'd say that a weak report would have a bigger impact, possibly. That's the only thing. And I'm for the rest, I'm not going to guess. For me, it's a 136 or 137, and you got to get out of that range to really get moving.
Yeah, hey, Brian, you still long USDCAD?
Yep, still long, mate. Still long.
You have the patience of a saint. And really nice.
Well, there we go.
You know,
Strong numbers.
it's great to have a great trade, but there's nothing like a great hold. You're very good at that. And
So
Kman.
good data. The
I'm the
dollar
worst.
Canadian just slipped a little bit. What do you make out of this data here?
It's strong. Participation rate was down, and so the unemployment rate stayed unchanged, but good solid numbers. It was all in full time.
Yeah,
it was all in full time, which is what you want to see. So yeah, another solid report, a bit Fed-like. So let's see what dollar CAD wants to do. It's dipped a bit, obviously.
I would say the dollar CAD, I don't have any Canadian exposure. I would say it comes down, especially with crude. Like I said, this is just now it becomes more of an excuse, right? You got crude oil that's still playing out, towards, we're eventually making our way towards the mid 90s, I think, in this bull flag pattern. So as that continues on, if you're long the dollar CAD, you're like, well, screw it. Here we got strong Canadian data, strong crude oil. We should probably trade back down below 136 today, I would think. I don't have any exposure, but I don't know if I'd want to step in front of it. Kman, would you want to step in front of it here? Or did he leave?
Okay.
Yeah.
He's covering the data.
He's covering the data.
No. I'm not going to stand in front of much here. In Canadian dollar, at least. That is fine. It's a pretty good report, because as Ryan already said, full time takes it, unemployment rate lower. No, it's a pretty decent report. So couple that with the, let's say, half hawkish hold of the Bank of Canada, Canadian dollar could gain a little bit. Yeah.
High weights as well.
It's usually a good practice to not try and make your week on a Friday.
Big time, Dale. Big time.
Friday's pips are beer pips.
Yeah, there you go. Hey, guys, I want to say thank you all. Kman, I know you're back to drinking wine, so congratulations. I hope you get a nice dark, rich Cabernet for you, and I hope that's your flavor, because that's my flavor. So hopefully you get something really nice there. And Ryan, I hope you have a great weekend with the kids. And Dale, I hope you can stay cool, because it's freaking hot here again this weekend.
I know, it's heating up again.
We're back to Hell's Kitchen here at 110 degrees in Arizona. So
I know. Well, there's great college football on Saturday. So
there is. And actually, there was a great game last night, NFL game last night. So, what a game.
Yeah. So anyway, something to distract me. And I just want to thank you guys for another great week. Ryan, Kay, Blake, we laid it on the court again for people. You guys appreciate what we do. Get into our chat rooms. And with that being said, guys, have a great weekend.
Looking forward to
you too. Thanks to you, Coach.
Right. Have a great interview.
All right. So have a great weekend, and look forward to doing it all over again next week. And with that being said, Don Mead at 7 Sentinels, welcome back to F.A.C.E. It's been a while, Don. Glad to have you back. How are you? Are you unmuted now? Unmute. It's at the bottom. I hear you. I got you. Got you, Don.
Okay, great. Yes, great to be back. Thank you. How are you, Dale?
I'm doing okay. I'm assuming that you believe that we're in an inflection point, and you're here to make a bearish case in the markets. And Don has studied Livermore. He has his own proprietary sentinels that give him a fix for what's happening under the surface of the market. So Don, if you want to share your screen, it's that little green button at the bottom of your screen that says share screen, and we can
there. Okay, then which screen is the question? I have 3, and then work with me for a moment while I get the right one showing. How do I do that?
It'll ask you to click on the screen you want to use. You just click that screen.
Click share screen.
Yeah, and then screens will come up, your screens. and then you choose the one with your cursor.
Where does that come up? I'm sorry. I go through this every time, don't I?
Share screen, clicked. What do you
Yeah.
see now after you click that button?
Well,
What's on
it
your,
says, got my name up there, Dale Pinkert, across a black screen. Let's
that's,
see.
yeah, okay, that's the screen. The black screen
Yeah.
is what, so you share what you want to share on that. You have to pick your monitor out.
Well, let's see. So far, it's show. Oh, I see. Screen
Yeah, you
two,
see what comes up?
screen 2, and screen 3. Screen 2.
Yeah.
Are we now seeing a screen that says 7sentinels.com across the top?
No,
No. Okay, just a second. We'll get it yet. Two. I want screen 2. All right, there. Share a screen. And then over here it says screen 1, screen 2, or screen 3. I punched each one of them. Nothing changed. What are you seeing, Dale?
just click one. You can only share one screen at a time.
Okay.
Pick the one with your opening slide. Pick that one. Hit
Okay.
share screen and pick that one. Then click that screen.
Huh. Nothing changed, huh?
When I hit share screen, then I click on which one I want to use, and then it says share. Again, after you've clicked the screen, it'll say share on that white box. It says select a window or an app that you want to share. You click the screen, and then on the right lower hand corner, it says share, and your screen will come up.
Share a screen. And on the same black screen, I'm supposed to see something that says share.
No, doesn't a box come up that asks you to select a screen?
Yes.
Okay, so select a screen with your slide on it. Do you see a screen with your slide on it?
Yes.
Click
Oh,
that
then I hit
screen.
the share button. That's the thing I've been missing. Are you seeing now the futures
Yes,
on my screen?
yeah,
And yes.
yes.
Okay. Now what I need to do is get onto this screen, my right here. Okay, now are you seeing
Yes.
7sentinels.com across the top?
Yeah, Don, got it.
Okay, good. Sorry for all of that. Anyway, how have you been, Dale?
Oh, I'm not real patient nowadays.
Well,
How about you? I think we're irritable. I think the whole world is kind of in a aggravated state. Do you see that?
I sort of sense that myself.
Yeah. So, but you know what? Fighting the battle, interested in hearing why this time is not just going to be a little correction that some people think is already over, or a lot of bulls, and you could understand the narrative, will want to buy a break in the S&Ps at about 4,200. That was a battleground, and they'll say it's healthy for the market to pull back here. So how are we going to know it's going to be more than that? What's
That's
telling you that?
exactly what we're going to talk about. And
Okay.
I entitled this discussion, the shape of things to come, because markets have a very particular shape. And I want to make sure that I've got the screen on that I want right here. Let's put it on this one instead. There we go. You know, a lot of people think in terms of what a bear market is. They think a bear market is just a period of time in which stocks fall back, and they say, okay, the market's in a decline. That's a bear market. I've come to understand over the years that a bear market is a very specific, real thing. And as I'm showing right here, each bear market has a specific and repeating shape and size. Market breadth repeats from one bear market to the next. The market indicators read the same from one bear market to the next. Economic indicators are similar each time. And there are specific evolving psychological aspects as the cycle begins and matures and completes. So today we're going to focus specifically on shape. That's why I call it shape of things to come, borrowed from H.G. Wells' novel and film.
Okay.
But the shape of a bear market repeats over and over and over. And I'm going to show you by example what I mean. Here's the 1929-1932 bear market. You can see that okay on your screen?
Yes, got it.
Oh, good. Notice 5 waves. 1, 2, 3, 4, 5. That's a 5-wave bear market. Then we go to the 37-38 example. Here's the same thing again. 1, 2, 3, 4, 5. 5 waves. A bear market exhibits 5 waves. 1939 to 42, same 5-wave pattern. It's easy to see. The 1968 to 70 bear market, same thing again. 5 waves. 1, 2, 3, 4, 5. 73, 74 bear market, which I happen to think is the one that most closely mirrors or matches what is going on now, because at that time it all started with the Nifty 50 being the only stocks that were going up while everything else was going down. Now it's a Magnificent 7, which are the only 5, the only stocks really that are going up while everything else is going down. But 73, 74, there's a 5-wave pattern. 80, 82, here's the 5-wave pattern. The 2000 to 2002 bear market, 5-wave pattern. 2007 to 2009 bear market, 5-wave pattern. And here we are, 2022, and I'm calling this the 2022 to 2024 bear market in progress. We had wave 1, started right from the second day of 2022, and that first wave bottomed in October 2022. We had a second wave up over the last 9 months, peaking in July, and then we began the third wave down. We are in the third wave down. Now, the psychological aspects are very interesting. Let's see where I put that.
Let me ask you this retracement for the failing rally was pretty extreme. I mean, over 78.6, I believe, back. Were the other examples, did the market rally that much, or were most of the recoveries in 2 more like 61.8?
It's rare to get that big of a retracement. But when you think in terms of the psychological aspects of the of that wave 2, it fit right in with what happens in every cycle. Here are the 5 psychological states of mind that accompany each one of those waves, and you'll see where that fits what you're talking about here. The first wave follows a period of descent into madness. I should say follows the descent into madness, which is what I call what we saw in the period of starting right after the 2020 COVID crash through 2020 and 2021. We saw the wildest speculation in this market I've ever seen in my lifetime. And I've written articles about that. If anybody wants to see, just go to the website and read an article called, there's several here.
Yeah, check out Don's website.
Yeah, let's move on. But anyway, we had that descent into madness, wild speculation like we've never seen in the last 100 years. And then we began the first wave of the bear market. In that first wave, the bear market gets recognized by most, not all people. There's a lot of denial. But then we get wave two. And that's what you're asking about. And that's what was most interesting, because wave two is the most dangerous part of a bear market. It's what I call, or what many have called, the return to normal psychology, where everybody thinks, oh, it's fine. This isn't a bear market. We're back right on cue with where we've been all along. We're back in the bull market. It took that big of an advance to get people back into that state of mind, but we most certainly had that state of mind all through actually the early part of 2023. And that is the most dangerous part of a bear market, because just when everybody starts thinking, oh, we're back in a bull market, everything's fine, that's when the rug gets pulled out. And that's where we are now in wave three. And this is a stage where traders suddenly realize there has been no return to normal. We are not in a bull market. We are in the bear market. And this becomes really the most vicious part of the whole cycle. Well, except for maybe wave five. Wave four emerges as participants begin to hope that a new bull market is underway. And then finally, wave five is the give up stage, panic, capitulation, despondency, reign. You can see that in.
Have you looked into average duration of wave threes?
Yes. Well, that's a good question, because I see that from cycle to cycle, we see a lot of alternation. In some way, in some stages, or I should say, in some primary bear markets, wave three is the longest. In others, it becomes a short stage, and then a wave four, and then wave five becomes the longest, like in 1932.
Okay. Yeah.
You see how two didn't last all that long, but it was pretty vicious. But wave five was the one that was real wipeout. Then you go.
So if we're in three, we should take out the too low of 34.
Absolutely. Yes.
On the three, we shouldn't have to wait for the fifth wave for that to happen.
Precisely. That is true. And I look for the recent lows of 2023 to be taken out, and then the lows of 2022 to be taken out, and new lows on this, which could take us easily to 3,000 to 3,200.
Yeah. Okay.
Before our wave four begins.
Okay. Got you.
At any rate, that's really the main things I wanted to talk about here, that bear markets are a real thing that have a specific description, shape, characteristics, and so on, and they repeat over and over and over. So
what's that? Let's see, it would be, instead of windfall, It's another adjective. Hey, what is it? Hay, not a haymaker. You had another term for what happens when you ride a bear market. What do you call those?
I'm not clicking in with what you're
Okay.
thinking of.
Well, it's a term for how much money you're going to make. It's similar to a windfall.
Rainmaker.
A haymaker.
A rainmaker?
Rainmaker, not haymaker. Haymaker's a punch, right?
Yeah.
Okay, so
in the very first conversation you and I ever had here on F.A.C.E, we talked about that because
I like that.
I named an article that I wrote.
You know what? Let it rain, bro. I'm positioned.
Right.
Okay,
And
so
actually, what a rainmaker refers to really is something that can make your entire life or your entire career. If you ever watched the movie with Matt Damon about Rainmaker, these guys start a law firm and then they get a case that becomes their Rainmaker. And I really believe that we're in such a phase right now that if a person plays this bear market properly, it can make their whole career.
So where is this scenario negated? Would taking out the high that we put in at 46, what was it, 10 or something like that?
Yeah.
Taking that out, change it?
Yes, it would. Yes, it would.
So we have a reference point for if this is wave 3, you have to get out of the way. It's not a wave 3 if we take out the recent high.
Correct.
Okay. Line in the sand. Okay.
Yeah.
Good to have one, don't you think?
Oh yeah. Yeah.
You know what? Because Don, once I for a while I would use mental stops, and my first stop was a mental institution.
Excellent. Well said.
And anyway, so you have any special offers you want to offer viewers that see this later?
Absolutely, I do. Speaking of Rainmaker, because I really believe this is a Rainmaker in the sense that I described, that can make your entire career if you play this thing right. I would love to have people on board and participating, and I'm going to make that very, very easy to happen. For people to join us. I set up especially for today an offer where for $1 single subscribers can have an entire month of 7 Sentinels, and that's the evening reports, the reports that go on each day, the weekly article, the whole thing for $1 for a month. And all they have to do is go to the website, sign in where it says trial offer up here, limited time trial, punch that, sign in. And if anytime they cancel, they can cancel the first hour, the first day, the first week, anytime during that period that they cancel, there will be no other charge other than that $1. And they will get that full month despite having canceled. And then if they decide to stay with us, fine. So can't get any better than that, I think.
All right. So check Don out. We'll see. If this happens, I think it's into year end, maybe first quarter. And Don, I hope that you have rain that that doesn't turn into a flood like Burning Man or some of the floods floods we've had, and that you're able to save the water to water the crops so that you have lots of wheat and beans and everything, and you stay safe in Hawaii.
Thank you. Thank you very much, Dale. And did I say happy Rosh Hashanah?
Yeah, it's coming up. Yeah, it's so happy New Year to you.
Thank you.
And Don, keep in touch. It's great to, let's see if this is the time.
Okay, I've really enjoyed following your work here, Dale, and your calls on the dollar and on IWM and on metals and everything have just been outstanding. So,
do you have a view on gold? Is
no,
gold gonna...
I really don't. I really don't follow the metal.
and just the market, nothing else
Yeah,
really.
I'm a specialist on the market itself, mostly the Standard & Poor's 500. That's my baby.
Okay. So, you know what, that, I saw guys on the trading floor that never left the same pit for their whole career. And you
Right.
get to know that like the back of your hand. So
I've always believed that we should do one thing and do it very well, if possible. At least I
Okay.
found the thing that I love doing, and that's the most important part.
Well, thanks for coming here and sharing, my trading warrior brother.
You betcha, Dale. So good talking to you, and take care of yourself.
All right, everyone. Don Mead, could follow him on Twitter at 7 Sentinels. And everyone have a great weekend. Join the team in 20 minutes on the Morning Edge, and hope we've added value to what you're trying to accomplish. Don't just count your pips, count your blessings, everyone. Enjoy your weekend. I know I will. Adios. Thanks again, Don.